I'm Fred McNeil, which means this must be...
Now? Good afternoon and welcome to another episode of Pillars of Franchising. My name is Kristin Selmeczy, and today we're live in our little studio here in Glendale Heights, Illinois. And with me today we have nice folks from Bank of America. But first, Karen, we've got some news to talk about for the word on the street.
We absolutely do. So very interesting.
Yeah.
So Subway just announced last week that it entered into a definitive agreement with Work Capital. They're a private equity company.
Yes.
And Work has some experience in purchasing
a lot
food companies. Absolutely.
Yeah.
Absolutely.
Well, I've read the article with you, and we've kind of been going back and forth to see, is this a good thing? Is this a bad thing? As you all know, we talk on this show a lot lately, it seems, about the Subway model and some of the feedback the franchisees are giving, as well as some of the new rules and regulations that have come out of the Subway franchisor. So, Karen, what do you think about some of these changes? Do you see mostly positives, mostly negatives?
Well, as we were talking, I think it depends upon who you are. If you're the franchisor, it's a great thing because they were really struggling. They didn't have the trust of the franchisee. They were struggling with even changes to make, transformation. They knew they had to put some more money into the brand,
right,
and all that. If you look at it from the franchisee point of view, they might be a little happy they have somebody new to work with.
Right.
But I'd be worried if I were them about competition, because one of these was taking a look at the list. It's Jimmy John's.
Yeah, and
Jimmy
how
John's
weird is that?
Yes.
Well, and it does bring to light an interesting thought. In a lot of the platform companies, not specifically, say, private equity, but in several similar situations, when a big corporation has two brands that directly compete, typically one gets phased out. And
Absolutely.
It really interests me to see how this goes down, because Subway has been around for a lot longer than Jimmy John's, but its reputation has really been bruised lately, both from, I think, the customer side, the franchisee side. So it'll be really interesting to see, where that goes. And, the issue, I think, is that Rourke has so many QSRs and sit-down restaurants, the fast casual models, that I'm wondering what kind of control they might have over some of their vendors.
Agreed. Yes, because it's the lot of reach.
Right.
Where then all of a sudden they have, if you want to call it, use the word monopoly.
Yeah.
Right. Where all of a sudden then there's a lot of making sure that with their vendors, it's like, well, this is what we want to buy and do.
Yeah.
And so it might not be good for their vendors.
Yeah. Well, and quite frankly, Rourke is not known as a company. They just went through this huge rebrand with Arby's, right? Arby's has gone, we have the meats. If you think back a couple years ago, that was their big rebranding. And so when you rebrand, that is not something that the franchisor takes all the cost. That all gets passed on to the franchisees.
Absolutely.
We've done some of that with the Neighborly brand. And so, when you're dealing with an angry bunch of bees already, and now you say, hey, congratulations, you're part of this big Work Capital, we've got all these brands, but now we're going to rebrand you again. Right. At some point, I think we're going to see the franchisees really squawking.
Exactly, because I think one of their issues was actually with some of the royalties they were paying, and they felt like it was kind of really squeezing them.
Yeah.
So this is going to add more to that conversation.
Absolutely. So listen, if you're a Subway franchisee or an ex-Subway franchisee, we would love to hear from you. I'd love to interview you and talk about what you actually experienced, because going through a rebranding myself, it can be really challenging. Transitioning from a smaller franchisor into a big conglomerate, again, there's a lot of moving parts, a lot of confusion. So please go online, visit us at pillarsofranchising.com so we can have a conversation with you and talk about what is it in the life of a Subway franchisee.
Sounds good.
Hey, franchise owners, how's your local marketing? Do you feel like you could use some help keeping up with your social media posts and comments and reviews? Do you wonder if you could be doing more to attract local customers? Are you able to identify new move-ins to your local area? At Westbine, we help franchisees like you reach more local customers through digital marketing. With daily monitoring, creative content, and ad placement, and customer data intelligence will get your business in front of the people who want your products or services. We also work with franchisors who need an agency to handle the digital marketing for all of their locations. If you're ready to reach more local customers, give us a call at 805-265-5440 or visit us at westbind.com. That's 805-265-5440 or westbind.com.
And welcome back to Pillars of Franchising. As promised, today we have with us Steve Shumate and Aneta Mazur from Bank of America. So today we're going to talk to both of them. It's very nice to meet you both. We're going to talk to them about how Bank of America can make franchise funding easy. Karen, would you like to start us off?
So I would. I looked it up. How long have you been in the kind of the whole SBA franchise space?
It's kind of a two-part question. The bank has been doing the franchise piece for about 10 years now. We started a team mirrored after our medical group because we knew there was a niche there. So we started that in about 2014. We've continued to grow that. The SBA piece, we've been doing SBA loans forever, but Aneta can address that piece. That's her specialty in terms of how long we've been doing that.
For as long as we've been doing lending, so Bank of America has been a preferred lender for decades, we're preferred lender to make things that makes things easier for the bank to offer financing to our clients, and I'm sure you have some questions about that.
Yeah.
Absolutely. Well, it's great because everybody knows Bank of America, right?
Yeah.
And so in most communities have a local Bank of America right there. So what makes you more competitive than some of the other banks out there when it comes to franchise lending?
Two things come to mind immediately. One is the fact that our SBA loans have a fixed rate. A lot of people do a prime rate plus, and as we all know, with the prime interest rate doing what it has past 2 years, they're just getting killed with rates, 10.5% now.
Yeah.
Our rates are typically under prime and they're fixed, so franchisee can plan accordingly and they don't have to worry that 2 years, 5 years from now their payment's going to increase greatly. The other thing that I love about our team, and I think this is a lot different than what most banks have, we do have a team dedicated to franchisees. So
Awesome.
if somebody comes to me that's a manufacturer and they want to buy a commercial building, I'm not able to help them because all I do is franchise lending. And we've got a team that works with the franchisors. They work with that group. We understand what the initiatives are. Just this morning I got a email from one of our team members letting us know what one of the franchisors' new initiative is for the fall, so we know how to help them better. We've got underwriters that are dedicated to the franchise space. We've got relationship managers that only work with franchisees. So
It wasn't Subway, was it?
no.
I thought maybe they called you and said, we're going to redo this design package
I got the goods on that one. I can give you the in-the-know on that.
No inside scoop there yet.
Okay, all right, good.
Why would someone want to have a loan, an SBA loan, versus just a regular loan? What are some of the nuances and differences?
One of the great things, as Aneta mentioned earlier, we're a preferred lender with the SBA, so that streamlines the process a great deal. Any banker, any bank can do a franchise loan. They can do an SBA loan. Mm-hmm. But with our group, we've got a team that specializes in franchise lending. We've also got experts that only do SBA lending. So that helps the process more smoothly. Someone like Aneta can come in and answer the questions and advise them on the pros and cons. Quite often we'll discuss a conventional loan versus an SBA loan.
Okay.
And the benefits of why this might be more helpful for you compared to that. Let the franchisee decide what's going to be in their best interest going forward.
Are you familiar, have you seen kind of a climb in loans or a decline based on these interest rates going up?
Unfortunately for us, we've seen a little bit of a decrease. A few more people are just on the fence,
Right.
trying to decide.
Yeah.
I've talked to several people where I've been approved for an additional territory. I'm gonna wait a few months and see
Yeah.
what the market has. So I have seen more people maybe waiting, a little bit more hesitant. But again, with our program being a fixed rate, and we do a lot of refinancing, they can get into it today with a fixed rate, know what their payments are going to be. If the rate decreases or when the rates decrease, if they decrease enough, they can jump back in. There's no prepayment fee, so they can
Awesome.
jump back in, take advantage of that, refinance it, and kind of have the best of both worlds.
Well, I think that's really important, and we have talked with various lenders on the show in the past, and I know in one particular episode we talked specifically, and I want to remind people that a lot of lenders out there will go prime +2. So again, this is a great advantage that you have, and that it's just prime and it's flat. And I think, when you're out there looking for money, make sure that you don't just go to anybody. Really research and make sure that you can plan on what that payment's going to be from here to the next 10 years, rather than having this ebb and flow of cash flow.
Absolutely. So when someone comes in to the bank and they want to start talking with you about loans, what would be your advice to them before they even get in there? What's some information they should be bringing with them? What should they know as they're talking with you about loans?
There are a handful of things that really help them and help us. If you know what your liquidity position is, if you know where you're going to get your down payment, how that's going to look, whether you have it in savings, if you're going to do a Rob, if you're going to take family into the situation, have they considered what their structure is going to look like in terms of the entity? Is it going to be an LLC with one member? Is it going to be 3 equal partners? They also need to look at some things in terms of the loan itself and qualifications, credit score. Do they know what their credit score is? Do they know if they've got any issues that's going to make it more difficult for them to get a loan? And with Bank of America, if you have 3 people that are applying and 2 people have great credit, that one person can put the whole deal in jeopardy. So you want to know what all of the members
Interesting.
look like.
And sometimes you wouldn't think about that.
No.
So it's good to have all that when you go in. You're armed with that information, which is
Yeah.
probably going to make the process go a little bit smoother.
We offer good advice. We always spend quality time with our clients to help them understand what's needed. Very transparent in the process, so they come prepared. They know what to expect. We absolutely want to avoid any surprises in the future.
Yeah.
So it's part of the building a good client experience.
That's excellent. That's excellent. So what about for your Bank of America clients? Do they tend to kind of get a leg up? Does that help them maybe qualify more quickly? What is that like for someone who's a Bank of America customer?
It's helpful because we know the business. We know the client. We can see what their balances are. We've got programs where, depending on the level of their deposit relationship with us, that'll give them a discounted interest rate on certain loans. So from that aspect, there's that familiarity where we know what their business is and we know how long they've been in business, things like
Right.
that. We do have the discounted program for our preferred members, so it absolutely helps us. But again, to Aneta's point, we will sit down and have that conversation, get to know them, get to understand how they got started, get to understand their liquidity position in that first conversation or two to make sure we're brought up to speed.
Awesome.
I like to know how long is the approval process, because so many people talk
Yeah.
about that, where it
Yeah.
can be anywhere from weeks to months. So in your case, what is the approval process? Or how long is it?
From the time we get all of the documents we need, and that's probably the biggest part, I would say.
That's where it takes
Just like a
longer,
mortgage.
right? That's right, because you've got people that don't have
Yeah,
those.
the
It
birth
takes them all-
certificate of
Right.
your firstborn.
Exactly.
Exactly. No, I think we do a great job, and Aneta and I've worked with several clients, and we will say these are the things that we need, and from there we'll follow up with an email, and we need the tax returns, personal business, things like that. Once we have all of that, normally we put that through a review process, make sure we've got a full package for an underwriter, or as we call them, an approval officer, to review. Once they get it, it's usually turned around within about 5 days. So from the time,
That's really fast.
and that way we'll have a decision. Within that, we may have a slight delay because the approval officer may have some questions.
Sure.
I need a better explanation of this, or things like that. But assuming we've got everything we can get the approval within 5 days or so, and then from there we go into the process of fulfilling the loan, and we may need a business valuation or property appraisal, equipment appraisal, things like that before we can actually fund the loan.
Yeah. Stephen, go ahead.
I was just going to say it's really interesting because I talk with a lot of people who they want to go out and buy a franchise and they're trying to decide what model, but in the meantime it's a matter of, well, how much money do I really have? Like what can I get in the loan? And so I think the benefit of working with a consultant, a broker, a coach, a mentor, whatever we want to call the person who helps you find the franchise, is that they can also help you walk through the process. Because often you're looking for a business plan, you're looking for a break-even analysis, right? And all of that information,
Yes.
it all comes from the FDD, from the operations agreement, and so it can become overwhelming at times, and certainly having a great credit score is the first step to kind of understand what you're going to qualify for. But have you had a lot where they go for one model and maybe they don't qualify for that much, but they qualify for less, so they've had to switch?
It's funny you mentioned that, because I've got one today where we got an approval this morning on a loan that we had tried initially to do the entire amount, and the numbers didn't work out to where we felt comfortable, and we went back with another option, and we've been working with the broker and the seller and the buyer all together, and we redid the structure of the loan to make sure that it looked like something that would work, and the seller agreed to take on a larger portion of the seller note.
Sure.
And we adjusted that so that the Bank of America note was a little bit less, and the numbers all worked out. So it absolutely works out that way to where we'll go in with one idea that we think's the best, and as we look at it, things change, or their mind changes. Maybe they want to put more money in, and we'll adjust it, and we try to be flexible to make sure we can get an approval that everyone's comfortable with.
Well, and the price, I would assume, remains the same, right? I think we talked about it's just a matter of how they get the money and when.
Exactly.
Yeah, that's great.
I like it that you take them through the process and they understand the process, because then if there's some nuances along the way, they're not like totally surprised.
And one thing I learned years ago is that during that process, whenever I kind of finish that initial conversation, I always say, I will definitely be calling and asking for another document of some kind, because this is the initial list, but inevitably something comes up and we will need something else. So don't think this is the end of it. There'll be additional things we ask for, because we do want to make sure that we help manage their expectations and help them understand the full process.
Exactly.
Awesome.
Yeah. I'm curious, one of these that we had talked about earlier too, just about, Kristin and I had talked about SBA and how they eliminated their list and the list of franchisors. So how is by them eliminating that list, how has that really changed your process?
I'll give my opinion. I'll let Aneta do hers as well. But from my vantage point, I think it helps us. It makes us more flexible. It gives us the ability to look at any franchises we want. And before, if a name wasn't on the list, we had to work with the SBA and slows down the process, things like that. Where today they've given that all back to the banks, and the banks look at that, and if we're comfortable with the brand, we jump in and we can work with it. It gives us a little bit more ability to make that determination.
More control.
Exactly.
Over it too.
And it used to be, I worked with one franchisee whose franchisor was not part of the SBA list, approved SBA list, and it took them months to get on that list so we can finance them through SBA. So obviously that will make things definitely much easier, much quicker. We will require a franchise agreement, and it has to meet certain standards. But yeah, it will definitely make things simpler.
And I think one other advantage with Bank of America, since we have that entire team that's dedicated to the franchise space, it's going to allow us to make those determinations much quicker, because we know industries that we like, and we know industries that are successful, and we've got a group of people who are probably familiar with those brands, unlike a local bank or a regional bank who just doesn't have that expertise that somebody like Bank of America does.
What about your local branches? I mean, I like to go to my local bank and, whether I'm refining a loan or whatnot, does every branch have somebody that knows you're in the franchise space now?
I'll say every branch should know that we have someone in the space. We've got a nice network where the branches work with a local small business banker. That small business banker works very closely with both of us. So if somebody comes in, and we have this happen quite frequently, a franchisee comes in, they want to expand and buy another location, or they want to buy a building, and they talk to the teller. The teller will reach out to the small business banker, who then gets us involved, and it gets to the right person with the right specialty. We'll bring in our SBA partners to make sure that we can assist them the best way possible. But
Awesome.
That's one of the things I love about the bank is we've got people that have that expertise, and I don't know everything about SBA loans, so I go to Aneta and she corrects me when I say something I shouldn't.
Well, we all need a little correction now.
That's it, that's right. But I like it because you have the relationship, you're thinking about the relationship, and then you also need the depth of knowledge. You really need both of those many times in servicing customers.
Yeah.
So it seems like you've kind of attended to all those different pieces.
And let's talk a little bit about what kind of client is ideal for you right now.
The kind of the joke that we all have in the banking industry is the client that has a ton of money that doesn't
Of course.
that doesn't need
That
to borrow
doesn't need to
money
pay.
and has a great credit score. That would be the unicorn that we look for. No, I think for me personally, somebody that's well educated in what they want to do. They've thought it out. I've got horror stories of people that just have no idea what they want to do, and that makes our ability to help them much more challenging. But somebody that kind of knows their finances, knows what their liquidity position is, knows what kind of brand they want to buy, what kind of investment they want to make, whether that's I want to get a small brand that's going to be $150,000, or we're going to jump in with a larger brand, and I'm looking at a $1.5 million total purchase. Just someone that kind of understands the big picture and understands what's going to be involved with that.
Okay, good.
I'd love to know, what if you, in talking with all the different franchisors and people that that you deal with, what's the one piece of advice that you'd give them?
The one piece of advice that I think is really important is to ask a lot of questions and make sure that you ask the tough questions, the questions you may not even want the answer to, because those are going to be the most helpful for you. But don't rely on just one source. The thing that we like about what we offer at Bank of America is the fact that we feel that you go out and you talk to a lot of different people and get a lot of different opinions. At the end of the day, we feel real confident that we're going to be able to offer a really good solution. But talk to a couple different bankers, talk to a lawyer, make sure that you have a lot of questions, you ask a lot of questions, and certainly talk to the franchise owners and find out the successes as well as the challenges, so that you go into it with a realization of what's really expected.
You just made me think of something. Our friends over at Vetted Biz, Patrick, he often talks about within an industry or a brand how many loans fail. If they've got 100 loans and of 100, 30 loans have failed, you better really think about, is that good enough statistics for you to go and invest in a brand like that. So I think that's a good point. And just quickly, can you tell us a little bit, our franchisors out there are listening and they want to understand what can they do, what should they do, what would you like them to do to start building a relationship with Bank of America so that maybe it's easier for their potential franchisees to get some money?
Again, we've got a team that works with the franchisors at that level, and we participate in their conferences, conventions, monthly or quarterly phone calls, so that we know what their initiatives are, we know what their goals and plans are, and what their struggles are, and that way we can work with them. And what I would ask is feel free to reach out to me through the website, and I'll be happy to put them in touch with someone that can give them more specific guidelines and pointers for making that happen with their franchisees.
Probably building the relationship early before they even need the money, right?
Right.
Because too many times we walk in when we need it, and then we're building the relationship and trying to get the money or get the loan. So the more you can do ahead of time, probably that also helps it go faster.
You want to become prepared. You want to build up your liquidity position, have enough funds in the bank account, have enough to be able to start the business, bring the skin of the game. We're looking for we're going to be looking for some kind of equity injection. You have to put some money down. We're going to finance the rest. Typically on the SBA side, 90% of the total transaction. So we require the 10% down. We'll also require to see that you have enough in liquidity post-closing to run the business and manage all of the operating expenses. So,
that's a great point, and we talked yesterday when we met about the fact, and Ray and I love to talk about this, is that whatever the franchisor estimates that you're going to need, right? We always say 2 to 2.5 times that number because, like after we opened, we had the recession, and then some businesses opened, and guess what? Then they hit COVID, and so you always have something going on, whether it's an election year, or there's a pandemic, or there's fallout in the financial system. So, we always advise people, whatever that franchisor number is, double it, maybe a little extra. Worst case, you pay it back early, but you have it there because what a lot of people don't realize is it's very difficult to, especially if you're replacing income and supporting your family, it's difficult to imagine what it's like with no paycheck, which is really what happens, right? And you have to, you kind of are paying yourself out of this money that you've borrowed just to keep your lifestyle the same. And not everybody can just say, okay, we're opening a business today, so we're going to eat out 1 time a month as opposed to 5 times a week. I mean, those kinds of changes are really hard. And so just be over-prepared. That's 2 to 5 years, most businesses close. Not necessarily the franchise system per se. We have better statistics than that, but certainly individual businesses. And we just don't want to have any victims of circumstance when it comes to finances.
Exactly.
Well, and to your point, we mentioned yesterday, we have a client right now that wanted to put 30% down on their note, and we didn't, of course, tell them what to do, but we said, please consider making a smaller down payment. That way you have more cash on hand should something come up. We can still finance that, but a year, 18 months, 2 years down the road, you can pay that back if you don't need it, but we'd rather you feel comfortable and having cash available to meet an opportunity or an expense that you're not aware of.
A lot less stress. Right?
Oh my gosh, right? And all it takes is a hockey accident,
Exactly.
right? Yeah. You have to replace new teeth in the front. You had to throw that in for Fred because he said absolutely no sports talk on the show. So there went a
What do you
paper
mean
one.
no sports talk? We like sports talk.
Anyway, so I want to thank you both for being on the show today. It's been a great pleasure. We hope that you've all learned something about Bank of America and just how easy they make it for folks that are looking to get into the franchising space. And again, Aneta, Mazur, and Steve Shumate, we will have all of their information online, but is there a specific place you'd like people to contact you if they would like to reach out today, tomorrow, in the near future?
Again, my information is going to be on the Pillars of Franchising website. My email or my phone number there is going to be great, and I'll respond immediately if you reach out.
same here.
Excellent. Well, thank you both for being here.
Enjoyed
Thank
it.
you.
Yeah, it was a great time with you both. So thank you very much. We'll be right back after this.
50 graduates resulted in 7 new franchisees owning 8 franchise brands, more than a dozen skilled graduates who are employees of franchise companies, all of them having earned a concentration in franchising exclusively granted by the Titus Center at Palm Beach Atlantic University, plus more than 80 franchise professionals on our advisory board. The Titus Center for Franchising is on fire in West Palm Beach, Florida. What do you need to join us? My students want to hear from you. They may even want to buy your franchise or work for your company. TitusCenter.com.
And we'd like to thank you all for joining us again today. We've got a special treat for you next week as well. Join us next week for Scott Greenberg with the Wealthy Franchisee book that he has out and some exciting news. And And also we'll have Carmelo Marsala from Spraynet on with a great interview about his brand and what he's done to help the environment and people in their homes when it comes to paint. I'd like to thank all of you for joining us on Pillars of Franchising today. Thank you especially to Steve Shumate and Aneta Mazur for coming out from Bank of America to shed some light on the ease of franchising financing. A shout out to our team of Million Dollar Mentors, Jerry Akers, Karen Kimsey-Sward, Ray Pillar, and our very own Legal Eagle franchise lawyer who's getting married this weekend, Laura List. Congratulations, Laura. I hope you're watching. I'm sure she's watching, right?
Oh, yeah, of course.
I'm Kristin, Shumate, your 4th Million Dollar Mentor. This has been another episode of Pillars of Franchising. We'd like to wish you all a very safe and happy Labor Day weekend. We'll see you next week wherever you get your podcast at 4 p.m. Central Standard Time. Have a great weekend.
La